Bidder's Call. Before we dive in, I'd like to provide a very brief overview on CFSI for those listeners who may not be familiar with our organization. We are a nonprofit organization with a mission to transform the U.S. financial services marketplace to help underserved households achieve financial prosperity. When we talk about the underserved, we're really talking about the unbanked, those without a checking or savings account, or the underbanked, those who may have one of those two types of accounts but still use alternative financial services such as check cashers or payday lenders. So this is, in essence, individuals who aren't having their full set of financial services needs met by traditional financial institutions like banks or credit unions. To support our mission, CFSI conducts market and consumer research to provide thought leadership, insight, and intelligence on the underbanked market. We help to build cross-sector relationships with active players in the underbanked financial services market, such as banks, nonprofit groups, and technology vendors, and we also provide advice to them for how best to serve the underbanked. We also provide seed funding and technical assistance to innovative companies and nonprofits that are creating promising solutions for the underbanked. In particular, we have provided $3.75 million in grants to 16 nonprofit organizations since 2004. And finally, we seek to inform the policy world on the needs of the underbanked in an effort to shape and inform policies affecting the underserved financial services marketplace. So the purpose of today's call is really to give you all an opportunity to learn a little bit more about the new fund, the Financial Capability Innovation Fund 2, as well as give you an opportunity to ask any questions you may have about the new grant program. So I'll start with some brief background on what we mean when we talk about financial capability, and also talk a little bit about some of CFSI's previous work to support the development of innovative strategies for building financial capability. I'll then provide a brief overview on the new fund and then open it up to answer some of your questions. So we'll have plenty of time at the end of the session for questions, but as they come to you, feel free to submit them again through the webinar's Q&A tool, and we'll have them queued up and ready to go. So we want to start the conversation today by framing the problem that we're really all here to solve. And that's that when we look at the current financial profile of American consumers, and this is across the income spectrum, we see that many struggle with managing their finances. 49% have difficulty covering monthly expenses. 56% don't use a budget to guide spending. A full third have no non-retirement savings. The majority do not comparison shop when obtaining a credit card or an auto loan. And finally, 44% gave themselves a grade of C or lower when asked to grade their level of financial knowledge. So overall, we're missing the mark on managing our financial lives, and this can have some serious implications, particularly for low and moderate income households, where exercising sound management can be critical to gaining stability and definitely to weathering unexpected financial shocks. So against this backdrop, we think there's an opportunity to do more to help people improve their financial behavior. Let's focus on behavior as the foundation of the financial capability framework. CFSI defines financial capability as a set of consumer behaviors that lead to tangible improvements in consumers' financial health, such as higher savings or increased credit scores. Some of those behaviors that we've identified are listed here. Being able to cover monthly expenses with income. It's really about being able to budget effectively. Tracking spending, planning ahead and saving for the future. Being able to effectively select and use financial products. And finally, exercising financial knowledge. So being financially capable means adopting these behaviors in a way that leads to greater financial stability. Now, relative to the traditional financial education field, this framework represents a shift in focus. Whereas financial literacy is about what we know, financial capability is much more focused on what we do. So this isn't really replacing the concept of financial education, but more expanding on it. Knowledge is important, but we can find ways to reach beyond the classroom to help people turn knowledge into action and make better decisions in their day-to-day lives. So at CFSI, we wanted to explore how this framework could be used to create resources and tools that were effective in helping consumers take that next step and turn their knowledge into behavior. So in 2009, we undertook a research effort to really find out what works best. We scanned the literature and interviewed dozens of players in this space to help us figure out what types of interventions were most effective in helping consumers improve their behavior. So in our research, we identified what we call the 4 elements of effectiveness that were common to programs and tools that appear to be effective in improving consumers' financial capability. Now, those 4 elements are listed here. The first is that effective solutions are relevant to people's specific concerns and financial situations, really addressing those things that are affecting people most in their financial lives. Secondly, effective solutions were timely in that they coordinate the delivery of important information to coincide with important decision points. So oftentimes we hear this referred to as just-in-time financial education. Third, they're actionable, and by that we mean that we pair opportunities for people to act on the knowledge they gain right away. So if we are in communicating with people about the importance of building emergency savings, providing them with that opportunity to open a savings account right then and there can help them to act on that newfound knowledge. And finally, because behavior change is an ongoing process, we want to be able to provide ongoing support in a way that helps people reach their long-term goals and provides an opportunity for periodic progress assessments so that if somebody does fall astray, we have an opportunity to help them get back on track. So we believe that a key strategy for putting these elements into action is linking access to well-designed financial products with guidance on how best to use them. So on the product side, we want to make sure that people have access to products that are easy to understand, easy to use, and are built in ways that promote their success. And by offering relevant and actionable guidance or education along with the product, we're arming people with both the tools and the know-how that they need to make positive changes to their behavior. So after our research and after taking a look at this framework, we're really inspired and wanted to find ways to support the development of the types of solutions that help consumers to build financial capability. So this led to the launch of the original Financial Capability Innovation Fund in 2010. Through a competitive request for proposals process, we wanted to find and support innovative, nonprofit-led projects that were designed to promote the financial capability of low-income and underserved consumers. So in addition to providing funding, we also wanted to support projects with strategic advice and technical assistance to help them get their programs up and running. Peer learning opportunities with other grantees as an opportunity to share best practices and discuss common challenges. Heightened visibility, promoting to the larger field when solutions showed promise, and finally evaluation support to really dive in and make sure we understand what the impact is of the interventions we were testing. So we launched the Financial Capability Innovation Fund with $1.5 million alongside a collaborative of funders led by the Citi Foundation. We sought to support 4 to 6 projects and ultimately selected 5. Those 5 are listed here as a means of giving you an idea of the types of projects that we're really looking to fund. The first is Clarify, a credit counseling service that's using text reminders and reporting on clients' progress toward paying down debt to help them stay on track with debt repayment plans. Co-Opportunity is building an online platform to help volunteer financial coaches engage more frequently and at a deeper level with some of their clients. Filing Research Institute is working with credit unions to provide interest rate reductions as an incentive for subprime auto loan borrowers to make timely repayments and therefore improve their credit scores. Piggy Mojo has built a mobile tool that lets users capitalize on everyday decisions not to spend money. They do this by allowing them to transfer the amount that they save to a savings account just by sending a text message. And finally, Mission Asset Fund is expanding its peer lending circles model to a variety of different communities and neighborhoods in the Bay Area. So seeing the work of our grantees and the great work we're seeing nonprofits across the country really working on, we wanted to continue the momentum. And because of that, we have created and recently launched the Financial Capability Innovation Fund 2. So the purpose of the new fund, again, is really to continue the progress we're seeing in the development of innovative nonprofit-led projects that are employing new strategies to promote the financial capability of low-income and underserved consumers. This new fund will grant a total of $2.5 million to 7 to 10 nonprofit organizations for an average grant size between $250,000 and $350,000. The grant term for each project will be about 2 years, beginning in April 2013. So we want to stop and acknowledge and thank our key funders who have provided generous support for the new fund. The collaborative of funders is once again led by the Citi Foundation and also includes Schwab Bank, the Schwab Foundation, the New York Stock Exchange Euronext Foundation, the Capital One Foundation, and Experian. So if you're a nonprofit organization, you may be thinking about why you should apply. Well, we really think that applying to the fund offers organizations a great opportunity to contribute to the development of the financial capability field. Some of the specific benefits that are available to applicants and grantees. One, obviously funding to get a program up and off the ground. Again, strategic guidance and peer exchange and learning opportunities to help provide the counseling and assistance that some of the projects could use to help make their programs a success. Third, evaluation support. Again, we're very interested in figuring out which of these interventions work best to promote consumer financial capability, so we pair individual grantees with academics and researchers to help them devise and execute on an evaluation plan. We provide access to CFSI's network in the underserved financial services industry. We work with a wide variety and a very large number of banks, credit unions, other nonprofit organizations, technology vendors, consultants, academics, regulators, really across the board, all the different types of organizations that care about this work. And we are able to make those partnerships and connections with grantees when appropriate. And finally, heightened visibility. We leverage our communications platform to get the word out, again, about those interventions that are really showing potential for improving financial capability. So it's important to note that some of these benefits don't just apply to the ultimate grantees. In particular, in our communications and our reports around the fund, we seek to promote some of the great ideas that we see across the applicant pool. So we have a trends report and a webinar in which we want to share with the field all of the great ideas that we see through this process. We also seek to continue relationships with some of the runners-up to help them find the partners and resources that they need to develop their program. So applying to the fund really creates an opportunity to begin a relationship with CFSI, and whether or not it results in an ultimate grant, it gives us an opportunity to get to know one another and hopefully work together in the future. So we're looking for any great ideas that organizations may have around improving financial behavior, but we are prioritizing several areas. So the first is that we are looking for projects that couple new or improved tools for education, guidance, or advice with well-designed financial products and services. This goes back to the product link that we mentioned earlier that we see as key to the financial capability framework. We are really going to be placing the highest priority on projects that link to products. Now, this link can take form in a number of different ways. It could be creating tools that engage with clients' existing financial products. It could be partnering with a financial services provider to distribute a product, or it could be, in the case of some nonprofits, offering a product or service themselves. So there's a number of ways that this link can be created, but it's something that we see as essential to the projects that we'll ultimately be looking to fund. Second, we're looking for projects that leverage technology to improve the customer experience and order to improve provider efficiency. We think technology is very important to reaching customers at timely moments and in helping to improve the scalability of programs. So we're seeing some promising early results from our current grantees and other nonprofits and companies that are leveraging technology to build financial capability, and we want to continue to explore how this is best done. Finally, we're looking for projects that leverage social networks as a means of facilitating positive financial behavior change. This is really about tapping peers, friends, and family as a source of support and accountability for clients as they pursue their behavior change and their ultimate financial goals. So we've seen, again, some strong potential and want to further explore how social networks can be used as a means of improving financial capability and the level of impact that can be had by both in-person models or online networks. Some of the criteria we'll be using to assess the projects are listed here. So the first is obviously that it promotes the financial capability of low-income consumers. What we're really looking for is organizations' ability to identify the specific challenges that are facing their clients, the behaviors that could be adapted to overcome those challenges, and how the program or tool will help consumers to ultimately adopt those behaviors. Secondly, again, we're looking for the strength and the quality of the product link that we see as critical to helping consumers build their financial capability. In particular, we're going to be taking a look at the products that are connected with the proposed projects and how they align with CFSI's Compass principles. This is an initiative we launched last year designed to help set some guidelines for what makes a high-quality product. There's 4 principles. We are hoping that products can embrace inclusion, they can build trust with their with the customers, that they promote their successful use for the client's ultimate benefits, and finally that they create opportunity for graduation to better products or asset building opportunities. So there's plenty of information on CFSI's website around the Compass initiatives and included in the RFP as well that helps provide a little bit more information and detail on that. Third, we're looking for the extent to which projects embody the elements of effectiveness. Are they relevant, actionable, timely, and ongoing? Fourth, we're looking at the extent that projects break new ground. We are hoping to support cutting-edge, new, untested strategies that really hold some potential for building financial capabilities. So we're going to be looking for those new-to-market ideas that meet that criteria. Next, we're looking for projects that are scalable and sustainable. Ultimately, we hope that if these interventions work, we can take them to scale. We're hoping that projects and proposals are able to identify how that process will take place if the project is ultimately proved successful. Next, we're looking for a robust program evaluation plan. What are the outcomes that are expected from the proposals? What data is going to be collected? How is it going to be collected? And how is it ultimately going to be analyzed? Again, being able to learn as much as we can from each of the projects helps us to get those learnings out to the field and improve the overall knowledge base. Third, we're looking at strong management and organizational fit. We're looking at the capacity that organizations have to take on these projects, the interest that they have in taking on these projects, and the experience they've had with implementing these types of projects in the past. Next, we're looking for the degree to which CFSI's involvement is additive. We're very hands-on grantors. Consequently, we're hoping that proposals can communicate to us how we can be most helpful to projects as they begin and seek to help serve the clients that they're hoping to serve. And finally, financial backing. If the project ultimately requires more funding than the grant program is able to offer, we're hoping that projects can identify the sources of funds to make up the difference. So a quick note on our timeline. Our RFP launched on September 12th. Since then, we've been engaging on a number of these bidders meetings in person, and this is the first one that's being conducted online as a webinar. Our RFP will close on November 2nd. At that point, we'll begin our review process. The Stage 1 review process will take place from November to December. We'll be whittling down the applicant pool to about 15 to 18 finalists. At that point, we'll be going back to those finalists and asking them to provide some additional information that addresses concerns or open questions that we may have had about the first round applications. We'll also be pairing each of the finalists with, again, some of our research partners and ask them to work with those research partners to develop an evaluation plan to submit in the round 2 application proposal. So we'll give finalists about 2 months to work on that project collaboratively with their evaluation partners. After that, we will conduct due diligence and make our final decisions in March with announcements of our ultimate grantees being made in April of 2013. So that's a quick overview of our fund, and at this stage we are open to taking questions. Any questions you have, again, please submit them using the webinar tool, and in the remaining time that we have, we will try to get to as many of them as possible. So we will actually start with some frequently asked questions that we've gotten from a few of our bidders meetings to give you an opportunity to think of your questions and submit them through the webinar tool. So first, we've got a lot of questions around the overall project characteristics. What types of projects that we're looking for? So one question we've gotten frequently is, how developed should each project be? Well, CFSI is accepting applications and ideas across from seed phase through pilot phase. So by seed phase, we're talking about ideas that organizations may have that have some internal buy-in where idea for a project is there, but it just hasn't been launched yet. In the pilot phase, we mean programs that have been created and maybe in their early test stages. So we're looking for projects that really span that range. Next, we're looking for, can projects be expansions of existing efforts or must they be new initiatives? We're primarily looking for new initiatives, but existing programs will be considered if the proposal calls for either a significant modification to the program, such as adding a product link, or offering the program to a different population in a different context. So if you have a savings program and you're altering it to reach a different clientele. What we will not consider is proposals for general operating support of an existing program or additional funding to scale a program to the same target client base. We've also had questions on around whether or not we are interested in projects that seek to influence federal policy. So in order for CFSI to consider a policy-oriented project, it just must be part of a broader programmatic effort. There still must be a client-facing program that's at the heart of it. But we are open to those types of programs, in particular because we're interested in scalable projects. And scale is often achieved because of a public policy relationship. So we've had questions additionally if the fund is focused on projects that are directed to consumers only. Yes, we are focusing on consumer-only projects. The focus of the fund is on consumer financial capability, so that's where our interest lies. Next, we've had questions around, are you interested in projects with an international focus? Possibly, but the project's primary focus must be based on U.S.-based consumers. So, for example, we might consider a project with a cross-border component if the basis of the program is in the United States. Next, we've had questions around whether we would fund a proposal for a social enterprise, a revenue-earning venture, or a fee-for-service project. Yes, absolutely. In fact, we see such projects oftentimes have an ability to build a higher degree of sustainability within them. So it's not a requirement, but at the same time, we certainly will welcome proposals with those features. So I'm going to pause for 1 second and turn it over to my colleague, Sarah Gordon, who is going to field a few of the questions that are coming in through our webinar tool.
Good afternoon, everyone. This is Sarah Gordon, Vice President of Advisor Services and Nonprofit Investments at CFSI. It's a pleasure to be with you all today, and thank you for joining our bidders call. I'm going to just try to step through the ones that we're getting through the online tool. So the first one is there a page limitation for the proposal, or can you direct me to a link with the details? That you will be submitting your application through our online grants management system. There is a link in the RFP, and for each question there are space requirements and limitations. So I encourage you, if you haven't already logged in, created a login registration for our online grants management system, that you do that so you can get a sense of the space limitations. The question of what is the expected number of proposals to accepted proposals? We really do not know how many proposals we will receive. We do know that we're getting a lot of interest. In 2010, we can tell you that we received 247 proposals and ultimately made 5 awards. But as Josh pointed out in his opening remarks, while that proportion may seem scary or not worth it, we highly encourage groups with great ideas to submit applications to us because for anything that really aligns closely with CFSI's efforts, we do try to make connections and at least promote your idea more broadly across the industry to help you in attracting potentially other sources of funding. A question about what is the smallest effective field that you will test. So I assume if there's any minimum requirement for numbers served. Again, we are looking for scalable ideas. That doesn't mean that you have to serve huge numbers as you're testing out an innovation. I really think we're looking for proposed numbers served that really make sense and are realistic given what you're setting out to do. To give you a sense, with our current cohort of grantees, I think the smallest numbers were in the 375 range over the course of 2 years. and the largest one was approximately 1,200 clients. Since the awards will be announced in April, should the project start date be May 1st? It depends, I think, is the answer. Ideally, you would start next spring. It is up to you to, in your application, tell us when you would be starting the project and how long it will take you to complete what you are setting out to do. What kind of products are you looking for the projects to link to? So at CFSI, we are interested in products that help consumers better and more affordably conduct financial transactions, to help them save more money, both short-term and long-term savings, that help them build and better manage their credit, and to help plan and ultimately build assets. So that could be any kind of transactional savings or credit product. So I'm going to turn it back over to Josh to handle the next set of questions.
Okay, we've had a number of questions around consumer focus. One that recently came in was around how we are defining underserved consumers. We have a more robust definition of that. As I mentioned up top, when we consider the underserved, we're thinking about the un- and underbanked population, but much more largely just those individuals that are not having all of their financial services needs met by traditional financial institutions, a bank or a credit union. So we're looking at those individuals that are maybe using remittances outside of a banking environment, or cashing checks using money orders to pay bills, or just operating in an informal action or informal environment for their financial services. So again, we're thinking about underserved in the context of whether or not there are, they have access to, or there are good options for them to meet their financial services needs. We've also had questions around how we're defining low income. There is no one specific definition. We've seen a couple of proxies, 200% of the federal poverty level, 80% of the area median. We've seen a number of these. Basically what we're looking for are individuals and families that are experiencing financial challenges that are created by they're having limited incomes. So my guess is a lot of the organizations on the line, and a lot of the organizations that are considering applying have this focus. So again, just really looking at those families that are having financial challenges mainly caused by their income. We also have questions around whether we consider projects that focus on a specific target population. We've heard about programs designed to serve ex-offenders, to serve youth, a number of different populations. CFSI, we're not prioritizing any subsegment of the underserved or low-income population. That said, we will consider applications that do target them. So if you are an organization that has a specific clientele focus, or if you're considering creating a project that really reaches a certain subsegment of that population, we will absolutely consider those in our process. Some questions around organization characteristics. What types of organizations are eligible to apply? Currently, you must have a 501c3 designation. We're exploring eligibility for other types of nonprofit entities that just have different designations. But right now, we haven't gotten certainty on our ability to offer this opportunity to those organizations. So we ask that you keep an eye on our website, and any updates around eligibility we will provide there. To the same point, we've had questions around whether colleges or religious organizations are eligible to apply. Yes, as long as you have the 501c3, you are eligible to participate in the fund. We've had questions around how strongly we weigh previous track record with financial services, building programs around financial services. This is something that is considered when we're thinking about organizational fit and capacity. However, organizations without this type of track record will not be excluded on this basis. We would just ask that they are able to articulate any plans for creating a project, and we will assess those on their face. Got a couple questions around geographic location, whether or not we have a specific interest in programs from one area of the country or another. No, we do not. We will not give extra consideration or take away points from anyone based on where they're located. We're looking for the strongest possible projects, so your location will not be a factor in our decision process. I've asked other questions around whether a local program with limited geographical focus would have the same opportunity as a broader program. And as Sarah mentioned earlier in discussing the number of clients we're serving, you'd have the same opportunity. The size or the reach of the organization would not be something that would be looked upon negatively, particularly if the project that's ultimately being built can identify a pathway to scale at a later stage. All right, we're going to take 1 minute to collect some, or take a look at some of your questions here on that have been submitted, and be back to you shortly. All right. So next we've had some questions around partnerships and the ability to form partnerships for proposals. One, can multiple nonprofits apply together? Yes, multiple nonprofit organizations can apply, though one organization will need to serve as the lead, which would mean that they would receive and disperse funds, and they'll be the primary organization that will be assessed during the selection process. Next, can a for-profit be a partner, and can they do so without receiving funding? Yes, we actually encourage for-profit, nonprofit partnerships, particularly as a means to create that product link that we think is so essential to building financial capability. So those types of partnerships are fine, and it is not a requirement that any partner, whether they're a for-profit or a nonprofit, receive funding as a part of the grant. If there's a relationship where a organization you're working with or an organization you identified would be able to participate without funding, that's absolutely fine. But other questions around how many partners can a proposal have? There's no minimum or maximum number of partnerships, and we, in our assessment, more partnerships doesn't mean extra consideration. When we look at partnerships that are included in the projects, what we're really looking for is the benefits that they add to the overall strength of the proposal. What kind of capabilities or strengths are gained by partnering with different organizations. We've had questions around whether nonprofits can partner with public entities. Yes, that works as well. We've had previous grantees that have worked with public agencies, and we will continue to consider these in the new fund. Also had some questions around the researcher matching process that we'll be undergoing. I mentioned that briefly in the overview of the fund, so let me provide a little bit more detail on that. So CFSI is partnering with a number of researchers and academics with specialties in the financial capability field. So during the selection process, particularly during stage one, when we're looking at the original pool of proposals, this group of researchers will be assisting us and helping us to review promising applications and indicate their interest and capacity to potentially partner on the project. Once the finalist selections are ultimately made, CFSI will use that feedback that the researchers provided to match finalist organizations with different evaluators based on their expertise, their geographical location, their capacity. We try to make as close and as appropriate of a match as possible. CFSI will then arrange for introductions between finalists and the prospective evaluation partners to see if it's going to be an overall fit prior to then asking them to work together to build a larger evaluation plan. So CFSI will be the one that makes the ultimate decisions around those prospective partnerships. That said, we are not forcing any partnership on any organization. Both the evaluators and the finalists will have a say in the decision process, and if it's not a fit, again, this is something we wouldn't be forcing on either party. And to another point, applicants can identify their own evaluators. If you have an evaluation partner that you've worked with previously that you would like to work with again for this project or proposal, that's absolutely fine, and there's space in the Stage 1 application for you to make us aware of that. We would ask that it is an outside evaluator to maintain a degree of independence during the evaluation process. So even if you have in-house capabilities, we would ask you to, if you're going to be identifying an evaluator partner, to identify one that is external to your organization.
We had a question come in, this is Sarah Gordon again, about if you can explain sort of what we mean by an impact evaluation, and are we expecting that of all of the grantees that we fund? And yes, we are wanting to ensure that any intervention that we are testing, that we are really understanding if the intervention is resulting in positive financial behavior change. We're looking for evaluations that are well suited to the projects and the stage of the project being proposed to us. So if it's early stage, it may not be the case that a randomized controlled trial experiment is the most appropriate, but given we are looking for a diversity of stage of projects in our portfolio, we do expect that some that are well suited for it would have sort of the golden standard of evaluation and RCT involved. Just going through the questions that are coming in, following along on the partnership theme, do the partners need to be defined up front? If there are stakeholders named in the proposal that are necessary or core to the idea that they don't currently have relationship with, can CFSI help bridge or foster a positive relationship to advance the idea? Is that appropriate? So no, not all of your partners have to be identified up front. We understand that some of the work for early stage ideas may be in the partnership development, but given the past experience of our grantees and how challenging partnership cultivation and management can be, we will be looking at sort of the strength of the relationships and the tenure of those relationships, and that will weigh in our decision making. So while it won't completely rule you out if you don't have the partnerships established, we do see it as a pro if you are already in relationship with the partners and that they're adding real value to the project. Similarly, if a project needs a financial partner to offer transactional accounts to the underserved population, will CFSI provide appropriate partners, or should the bidder provide the partner for the project? Again, it's advantageous if you probably come with the partners pre-identified.
So it looks like we've got a couple of questions that are coming in around budgets and pulling together the overall budgets as part of the application. So we've got a couple around those, one being around what percentage of the budget should be reserved for evaluation. There's really no hard and fast rule. During that stage 2 process, when evaluation partners are working with finalists, they'll work together to determine the type of evaluation that best suits the project and the amount of grant funds that will be allocated towards that for research purposes. So in instances where there's a potential for a larger evaluation, the evaluation partner may have external sources for funds, or CFSI will work with the partner organization, or I'm sorry, the finalists and the evaluator to try to figure something out. So for each one of the projects that we've had in the past, that portion, identifying the amount for evaluation, comes about later on in the process once the plans become a bit more finalized. Is there a certain percentage of the grant that can be used for administrative expenses? Again, there's really no hard and fast rule there. Though the grants, again, are not designed to cover general operating support, As a guideline, about 10 to 15% of the budget for covering overhead and administrative costs is typical. So if that gives you a baseline, then hopefully that's helpful. I've had questions around how grant funds are dispersed. So they're dispersed on a customized basis that best fits the project plan. So if the project involves a large investment up front to develop technology, but not as much on the back end, then we disperse funds correspondingly. So again, on each one of those, it becomes it's determined on a case-by-case basis. And finally, can funds be used to provide incentives to clients? You have a lot of questions around match savings programs and IDAs. So a couple things here. One, funds can be used to provide incentives, but we would encourage applicants to really think about how those incentives are scalable and sustainable over the long run. In particular, for match savings programs to be considered, we would hope to see a new twist or innovation or a modification on the standard IDA program. Again, we really think this fund is an opportunity to test some of those new ideas and new innovations and features that we think could be effective in promoting financial capability.
So another budget question, is the salary or a portion of the salary expense for the person managing the program allowable under the award? Yes, it is allowable. Can one agency submit multiple projects? Yes, you may submit to us as many proposals as you'd like. As long as you have innovative ideas, we will look at them all. There's a question about the 2010 round. Were there proposals that we received that were rejected but were a recurring theme among different organizations? I would say we saw a lot of requests in 2010 to provide support for pretty traditional financial education programs where the outcome was really around just improving financial knowledge. That is not what we are focusing on at CFSI with the Financial Capability Fund. We are really, as Josh, as we've been stressing, looking for cutting-edge, new and improved, new-to-market innovations. So not just new to your organization, but new-to-market ideas that we think hold promise, have the close product link, leverage technology in some new or different way, that really hold promise for changing consumer behavior in addition to building financial knowledge. There's a question about whether a workplace-focused project would be of interest to CFSI. There's no reason why it wouldn't. There's a question around what would qualify as expanding client groups. Is that different ages, different genders? You know, I think it's up to you to tell us how it would be an expansion over what you've already been doing, if it's a different demographic group, or if it's really a different group by some sort of financial profile that would qualify as well. Is there any age restriction on the target audience being served? No. Would you be eligible to apply if you're currently not a nonprofit but you're offering a financial literacy program? If 2 points on that. One is that all projects must have a nonprofit 501c3 as the lead applicant, but as we've stressed, we do encourage partnerships. So if there are for-profit providers, it is allowable to have a portion of the grant funds directed to those for-profit partners if they play a critical role in developing and offering the innovation that you've outlined to us. And then the piece about a financial literacy program, again, we're really striving to support financial capability programs, so more than just building financial knowledge or literacy. A
couple points that have come in around some particular types of projects that may be considered. One, we've had a question around, would we consider retirement saving services, given that many underbanked low-income consumers also may not have retirement savings? Yeah, absolutely, we would consider that. Again, if it's part of the larger financial need, or if you can identify a financial challenge really across that space, we're interested in hearing what the solution is. So we would be open to hearing about projects that are focused on retirement savings. We've had another one that actually raises a really good point. One of our focus areas is helping low-income residents build wealth and assets through entrepreneurship. Would projects focusing on financial capability for small business owners be considered, or is the program strictly focused on the consumer side? So this raises a really good point around asset building through entrepreneurship, where there's a really kind of a crossover between the business and the consumer. Those types of projects we would be open to considering for the fund, given that at that stage of micro-entrepreneurship, the link between the business and the person is pretty much one-to-one. What we aren't looking for are larger business training services that may be more focused around larger, more established businesses or B2B type intervention. So I know it's a little murky, but I'd say for asset building through micro-entrepreneurship is something that we would consider.
Okay, another set of questions. Can partners just be listed, or will an MOU be necessary to upload with the proposal? So we are, for the first stage, looking for letters of support from your partners. But should you receive grant funds from us, and should the partners be, ultimately, if you're directing a portion of the grant funds, or if they are critical to your ability to be successful in launching your innovation, we absolutely would want to see some sort of MOU or contract between you and the partners as you go to execute the project. So that would be an expectation down the road. If one of the CFSI identified researchers or evaluation teams is utilized, is it necessary to include the cost of evaluation in the budget? So in the stage 1 proposal, we are asking for your thoughts on how you would go about evaluating the project, and would like to see your high-level ideas of the award you're requesting from CFSI. How much of that would go towards evaluation? In most cases, in our past experience, once you're matched with the researcher, there's a lot of updating and changing that will happen between the stage 1 and the stage 2 application as you really put more emphasis around and more detail around an evaluation plan. And we absolutely want a very detailed evaluation budget for the stage 2 proposal. There's also a question about whether we're requiring match funds, dollar for dollar, for any of our awards, similar to what the Social Innovation Fund requires. No, we do not have a match funds requirement. However, if the project that you propose to us costs more than what CFSI is able to contribute, we are most definitely interested in have you identified and have you secured other sources of funding that would help you cover the difference. So when you do the project budget, you'll need to indicate how much are you requesting from CFSI. We'll look at what the difference is, and then do you already have other funders lined up to cover the difference. Would you support a financial empowerment center that offered innovative or unique services? Possibly, potentially. I think it's really just a matter of what are those innovative or unique services.
So we've got a couple questions around the types of consumers, and I thought it would be something I could address again. One noticed that, or suggested that the previous projects we funded seem to target middle income rather than low income clients, and I wonder if the emphasis would be similar. We're looking at low to moderate income. So really, absolutely, we are interested in low income clients, again, we're really looking at we're looking at the consumer group that's being served, and also at the same time the strength of the intervention when we're looking at the or considering the proposal. So absolutely low-income clients will be considered in this process. Another question I think is around the definition that I put forward around significant modifications of existing programs. It's a question around what would qualify as a expanded client group. Is it different ages or different genders? I think a good example of this may be one of our current grantees, Mission Asset Fund. So they had created a program around social lending circles, really leveraging social networks as a means of helping people to improve their credit scores. And their project was originally focused on the Hispanic population in the Bay Area near San Francisco. But recognizing the potential, they expanded their project to a number of different communities, a number of different ethnic communities, the LGBT community. So they were looking at populations where the original program hadn't necessarily been designed with them in mind, but where they saw some additional potential. So an example of what it wouldn't be is we wouldn't fund a project, say, that's focused on youth-based education just to a larger number of schools. There, the focus would really be the same. You're focusing on young students. So we're looking at, can you take the program that you've created and identify a different context, a different community, a different population, where the needs or challenges may be a little different, but you think that the project that you have may still be applicable.
Great. We have another question here about, can you have a fiscal sponsor for the project? You need a 501c3 in the lead who's playing a critical role. So no, we're not allowing fiscal sponsors if it's just for the purposes of pass-through. Yeah, fiscal sponsor or fiscal agent.
We have a recent question. Does being a CDFI, a Certified Development Financial Institution, and a 501c3 hinder eligibility? No. Not at all. With a 501c3 designation, you are eligible to apply, and I'd imagine that you may have some opportunities for product link, given that you are a CDFI as well.
We've had the question again about the scale of the project. If there's a minimum amount of clients served that we're looking for throughout the grant period, that question has come up again, so we will repeat our answer to that. It's really up to you to propose to us, tell us what is feasible for and what is reasonable given the stage of the idea that you are proposing and what you can really accomplish in the 2 years. For early stage projects, we expect the numbers served to be less. For ideas that are a little further, more developed, and it's about further testing and refinement and replication of those ideas, we would look for greater numbers. At the core, we're looking for scalable ideas. So it may not be that you're going to serve huge numbers of consumers throughout the grant term, or maybe ever at all. But the idea is the ideas that you propose to us, are they can they be replicated? Can they be scaled across the financial services industry more broadly? So I shared earlier that in our 2010 grant fund, I think the smallest number of clients served by one of our grantees was approximately 375, and the largest was 1,200, to give you a range. But I would say, again, propose to us what you think is reasonable given the projects that you've outlined.
I had a recent question around whether it's a requirement for target consumers to be U.S. citizens. No, it's not a requirement at all. So if you're reaching out to non-citizen population, you're certainly eligible. Another question around, is multi-year funding available? The grant term for the project is 2 years. There's a little give and take on that, but depending on the term and the structure of the project, but that's generally going to be the term for each of the grants.
I'll just add a note on Josh's response to that question. I think we're looking to you to tell us what is the project you are looking to launch. And you know, it could be for less time or potentially for more time. We actually have a couple of projects in the mix with our current grantees that will go on beyond the time, like our funding will expire before the projects are really finished, but those organizations will still have reporting requirements to CFSI until, you know, we have the final result of the evaluation in. So again, part of your job and your application to us is describing what it is you're going to do and how long you think that's going to take and how much, you know, in the way of financial and non-financial resources you're going to require to successfully execute what you've outlined. There's a question about, are you available by email if we have additional questions later in the process? You may at any time email us at questions@cfsinnovation.com. We are checking that regularly, and we will do our best to, you know, follow up with anyone who emails us at that address. Similarly, there's a question around, will this presentation be made available afterwards, or is this information contained in the RFP? Yes, most of the information that Josh covered at the start is, you know, included in the RFP. We will be posting the FAQ for all of the questions that we have received through the bidders meetings and this call that will be up within the next week or so. And the presentation, the slides from this webinar will also be on our website. So we encourage you to go to www.cfsinnovation.com and follow the links to the information about the fund and the RFP, and all of the materials will be made available there.
All right, well, we are out of time. I want to thank everyone for participating, taking the time to participate on the call, and thank you for your great questions and your interest in the fund. As Sarah mentioned, we will be posting this information on our website along with an FAQ document, and on your screen you should have the questions@cfsinnovation.com link there, and again, feel free to submit questions there. We'll be monitoring that inbox and getting back to you briefly after that. So with that, we will close, and thanks again for your interest.